Let's take it back to 15. So we believe we're getting a bounce out of that level 1. We have something like a level 1 and a 2 because we are attacking a higher degree level 4, or what we could conceive to be a level 1 and a 2, and then we'd had something like a 3 and a 4 at this point, and a 5, or even a 3 and 5 is actually here. And 4 is up here. So this makes this level 1 where we had the first rejection. Usually we get rejection at level 1. There's a bounce at the 200-point moving average. We're seeing some kind of a neckline for double inverted head, and we expect there's a break to the upside. And therefore, we perceive the market to be doing a higher degree leg 1 because we're seeing negative momentum on this 15 minutes and on the 5 minutes and on the 3 minutes. Then we are really moving inside of an ending diagonal, and we should be buying this negative momentum. Or this negative momentum is a trigger. That we can't get it simple, right? But we are seeing reversal. Okay, so this is going to be doing the 1 and a 2, 3, 4, and a 5, right? And we can now begin to project leg 5 easily as 127.2. We already have this leg 5 already projected out of the structure. Of course, leg 5 means you want to project from that 2C here all the way to leg 3, and it will take you to 196.13, really. Maybe 196.30, but at least 196.13. We're going to get 2 more swings into this. Now I believe everything is clear. And in order to do an infograph of the moves, bears us a second. So the first leg is happening right now. If we are really doing this short term, then we just buy from the current level, take it to 195.80 is going to be leg 3, then we're going to get leg 4, will support the neckline, and then we are going to get another leg 5. We can do this, therefore we can short term trade the current move twice. We buy again leg 4, takes us to leg 5. This leg 5 probably does resistance 1 for the week, as shown here. Resistance 1 is 196.26, for instance, so just 196.10. And then we get another ABC. Of course, at that point, we've done 5 swings. All this rounds up into a leg 1, a higher degree leg 1, of course, and we would resort back to that. Remember, this labels level 1 and level 2A and 2B and 2C. So at this point, we'll get, a level 1 into 3, probably, unless there's a very strong break to the upside. And then we get another leg 2 into 3, and the market begins to move higher. All right, depends again on the fundamentals, especially the CPI tomorrow. Once that is released, I believe we're going to have a more volatile sterling against the yen, irrespective really of the readout of the CPI. If the impact is to the downside, it's still a buy because we can see we're going to get something like an ABC here before the market moves higher. both side to the upside. So with that leg 5 at 196, we expect to see $3.1. Right, and then another 3.2, probably until we do better roundouts. Right, we expect to see 3.1 and then another 3.2. And then a breakout high. Because this is an ascending triangle, we can get still a lot of reverberations entrapped inside of the triangle. All right, so the market is a buy at current levels. We are seeing negative momentum. We believe a bit of negative momentum on the 3 minutes and on the 2 minutes. If we have extensive negative momentum, then that 1, 2, and the 3 can still, or 1 and 2 can still do a 2A, 2B, and 2C, but without, because we perceive to be moving inside of this triangular formation because of the mild negative momentum that we're seeing on the 5 and 15 minutes. So the market becomes a buy if you are trading solely sterling yen. $195.15. We just need to have a hedge below the market bottom, that is all. And the hedge that we have below the market bottom, we can take profit for it at the next internal support on this 15-minute chart. So we have the hedge here. All right, so assuming that hedge gets open, this is 194.50 or 194.60 because the market bottom, 194.60 is best because the market bottomed at 194.70. So we have it at 194.60. And we take profit at support too for this at 194.20 or just above level 1, for instance, 194.30. If this hedge gets open. If this hedge doesn't get opened, we take the long and we take it to resistance 1, 196. Resistance 1 today is 195.98, which is really 196. So we buy the long, take it to 196. This is a short-term trade. If we are going to, if our position traders, and we already have longs as of yesterday, I believe we can have longs at 195.50 actually. We can have longs here. We hold them. We're going to hold them. If we have hedges to protect these longs, we could have hedges as low as 190. As 195.20, for instance, we'd want to close them now. So I believe we have longs at 195.50 exactly. This is 195.50. We're going to hold them, take profits at 196 for short-term traders. If we add hedges for these, if we're protecting by hedges, say at 195 or 195.20, whatever hedges we have, I don't believe we're going to get another chance to take profits on them. Usually, if you had hedges at 195, we would have closed them at 194.80 or 194.70 because the market did 194.70. So we'd have closed them and had another hedge at 194.60 or 194.50 to protect. Now we should not have hedges. We should be hedgeless. But of course, it depends on how you manage the position. All right, so if you still have any hedges, you want to close them, hold the short-term trade to resistance 1 today. The market is about to break above the pivot level. We are bouncing out of the 200-point moving average. And of course, we can even add size for short-term traders. If you wish, it takes us to 196, maybe a bit higher, 196.10. If we are position traders and we have that entry at 195, at 195.50, in order to hold the position to 197, you want to make sure that we have a trigger on this 15-minute chart. We need to see a trigger. A trigger, of course, is something like this one here. So if we get a trigger, we hold. If we don't get a trigger, we don't. We just take profit at the neckline or slightly above 195, 196, 196.10, and redo the trade tomorrow after the CPI. We will not know if we have a trigger or not really, except by Asia time. That's when you're going to, probably the move would have continued higher, and it will begin to show whether we really have a trigger, for instance, on the 5 minutes. This is not a trigger because it's showing negative momentum, but very close to what you can consider as a trigger, but it is not a trigger. So we need to see a trigger if we are going to be holding for break above the neckline. It's possible we should actually be holding for break. Technically speaking, from the structure, we should be moving higher because this has been a very lengthy consolidation, and it's rare to have a 3 and a 4 and a 5 and then another ABC. Probably it's like we have a 1 and a 2, 3, 4 and a 5. This is all finished. This is dot 1, dot 2, and we break out into 3. But you cannot really force the market into ending a consolidation in a premature manner. Okay, so for short-term trades, let's recap. For short-term traders, if we have longs at 195.50, we are going to be able to take profits towards Asia time at 196 and 196.10. If we have hedges for these longs, say at 195 or maybe 195.20, we will close. We should have closed the hedges at 195 at on retraction lower to 194.70, probably close them at 194.80 or 194.90 even. Now we're going to have a hedge at 195.60 to protect our holdings at 195.50 as the market moves higher. If we do not have, as again the markets move higher, if we do not have any longs in the first place, it's time to take the long. This is probably going to resistance 1 by Asia time, 196. Over here showing 195.98. If we are holding a position trade and we're in at 195.50, for instance, we're going to hold 196. If we see positive momentum or a trigger on the 5 or 15 minutes or double trigger, say on the 5 and 3 minutes, that is still showing positive momentum continuation, then we can hold to 196.70. We may even be able to hold, depending on the momentum picture, we may even be able to hold on a breakout after the CPI release tomorrow, all the way to probably 197, 197.60s, 197.70s. We have been looking at these targets since yesterday.